Good morning, ladies and gentlemen, and welcome to the show on this Wednesday, the 24th of November, 2021. Thank you for tuning in. Glad to have you guys here. Now, here's what I want to say. I've done shows on this, and we'll talk about silver for a minute. I've done shows on this in the past about how I think that the rich people are waiting for something with silver and gold. They realize that the fundamental behind the entire world's financial system is silver and gold. They realize this, and they realize that the price has been. They know, just like you guys know, they know that silver and gold have been manipulated to the downside. I'm going to say structurally manipulated to the downside for a very long time, and are still being manipulated to the downside. And believe me, they also know that their dollars are in jeopardy. The dollars that they've accumulated, and I mean they've accumulated billions, are in jeopardy of losing their purchasing power. They know that they can't buy into treasury bonds because the yield is too low to keep up with the price of inflation. Their bonds are all negative yielding. And so basically, they didn't get rich by being stupid. And I believe they're waiting for something. They all know about what happened with the Hunt brothers when they tried to corner the silver market. But you know, it's very tempting. The gold and silver market, especially the silver market, because it's such a small, tiny little market. Now, I was browsing through YouTube this morning, and I saw this show on there. It says Donald Trump and Elon Musk are going to gang together to take down the gold market, or basically buy all the gold, corner the gold market, or whatever. Now, I think that was mostly, I didn't put too much emphasis behind that really happening. In other words, I just basically fluffed it up. You know, I didn't even go there to see what it actually was, you know, but the headline got me, you know, and there's a reason why that got me is the silver market is such a small, tight market that it wouldn't take very many, we're talking about money in the billions right now, on physical to actually break the silver market. Wouldn't take very much. A billionaire in the category of Elon Musk could probably take it down, just like the Hunt brothers took it down. But why don't they? Now think about this for a minute. They remember what happened to the Hunt brothers. It's one of those things out there where the silver market is being, I'll call it being nibbled at by, picture it like if you guy had a pool full of fish, you know, fish pool and stuff, and you ever drop and watch fish feed? You drop a big lump of food down there, and the fish come in to feed, and you get the small little fish coming in nibbling at it, and you get a little bit bigger fish coming in nibbling at it. But overall, they consume quite a bit of the fish food. That's the way with the silver market right now. We got all these small players in there nibbling at it, and there's nothing that they can do about that. The officials in officialdom, there's nothing much that they can do about that other than keep the supply up. Then you got some medium-sized fish coming in now to feed. But the big fish, the really big fish, have been staying away. Or I should say, maybe not staring away. Maybe they're nibbling at it, but not in a noticeable way to make themselves obvious. I think things are going to change. At a certain point, you know, there's going to be a mass movement, and the bigger players are going to start to come in regardless. But they're going to come in mass, rather than just a sporadic one here or there. Like the Hunt brothers were all by themselves trying to take down the silver market. I don't think it's going to be like that this time. I think at a certain trigger point, and this is what I mean when I say they're waiting for something. I think that the big players out there are waiting for something, and something that they know about, and what that is I think a cheaper silver price. Well, what would cause a cheaper silver and gold price? To make it worth their while to take allocation. You see, now here's another thing I want to talk to you guys about, is allocation. For you guys, it's not a problem. You're like the little tiny fish nibbling away at the big silver rock, you know? The big silver rock that's under the water, you know? You take your little maybe one tube or whatever silver back home with you. That's not a problem. Allocation's not a problem for you guys. But when you start to talk about serious money, you know, allocation becomes a tremendous problem. And this is what's kept the big players away from the gold and silver market. The really big players, the really big money, the money that could clear out the warehouses of gold and silver in one fell swoop. This is what's kept them away. But at the same time, they don't like to see their money value eroding on their money at guaranteed more than 6% per year. That's guaranteed, right? That's CPI is over 6% now. That's a guaranteed loss of over 6% of your money right then and there. Now, we are talking billions. See, the smaller fish out there, it doesn't matter so much. They see the inflation, it's bad and everything, but they're continuing on with their life. But you get the really big guy. Say you got $1 billion. Say you had $1 billion, right? And you're going to lose 6% of that $1 billion each year. Over 6%, 6.25%. This means that your fortune is not growing any longer. Now it's shrinking. This is not something that billionaires want to happen. They don't want to see their fortune shrink. So, allocation that's been a problem all along. There's two things I think coming together here. I think that the rich people are waiting for something, and what I think they're waiting for is this deflationary spike event that's bound to occur. It's bound to occur, and the reason why is because the Fed is pricking the bubble now. And I've done shows on this, the last couple shows I've talked about this. This could have a very negative effect at first on gold and silver and cryptocurrencies. Could have a very negative effect at first. And we might actually already be seeing a little bit of front running of this because, I mean, these guys are no fools in the financial system. They know interest rates are going to start to creep up, which they already have been in the last 3 or 4 days, along with the Fed doing this taper because the Fed's the biggest buyer or purchaser of bonds out there, and they're deciding to cut it to zero. So with negative yielding bonds, who's going to purchase it? Well, the yields are going to start to creep up. The Fed's tapering into weakness. There's nothing else out there to say about it other than the economy's going to turn downward now, as long as they continue. Okay, so we got that going on. But there's a tremendous inflow of money that happened during this crisis. And that money has to play itself out within the financial system. It hasn't fully played itself out. So on one side, we got inflation caused by all this excess creation of liquidity or capital by the financial system. And on the other side, we got the Fed pricking the bubble right now. So we're cutting this little area in between. This is another reason yet why I say that I think the Fed's going to get away with their first cut. Get away with this. They might get away with the second cut. They might even get away with a third. Well, the markets could actually still be buoyed. Even more than buoyed, they could actually go upwards a little bit during this period in time. But, you know, they're in the process of peaking. And that's because all of that new monetary units that were created are still floating their way around in the system. It's like an injection of monetary madness into the system, and this is what's fueled all this speculation that we've seen over this past period of time, you know, which is still ongoing. Look at cryptocurrency if you want an idea of the speculation that's going on. So we got all these things going on simultaneously, but never forget that the Fed is at the job right now of pricking this bubble. And they're going to continue as long as they can get away with it. And this is important because this might be intrinsic to understand why and what the rich people are waiting for in the gold and silver and precious metals market. Now, there's this problem for them of allocation. I mean, if you're a rich guy, you want to invest say you want to invest $1 billion in silver. Do you know how many truckloads that is? Do you know what a problem that would create if you wanted the physical? And, you know, you can't do it right now anyway. Because you would be classified as a hunt brother and you would be hunted down, you know, or whatever. I mean, they just won't let you get away with it. And the rich people know that. But they might all be waiting for something. What are they waiting for? Lower prices. They always like to buy at the cheapest possible and make the biggest possible gain ever that you could imagine. And at a certain point, they're not going to care about allocation anymore. They will solve that problem one way or the other if they can get something cheap enough that's going to go up high enough in a short enough period of time. And this is what I think they're waiting for. I think they're waiting for the lowest possible price on precious metals. And then I think they're going to allocate. I don't think they're going to just buy. I think they're going to buy and allocate. Not buy the paper. They're going to buy and allocate like the rest of us. And it's that big money that could break not just the silver market, but break the gold market too. And what I mean by break the market is I mean there's no physical supply available for sale. And that once it actually happens, that could extend for a long period of time. You just can't buy it. And the people that have it, well, they will be sitting really pretty, won't they? Because you think the price is going to go down if the world doesn't have any to allocate, especially with silver. Once you get of course, you know, as the price moves higher, it will hit a certain price point where silver will be turned back into the market because it's high, it went way up. But once it does that, it'll never come back down to these levels it's at now again, ever. You'll never see that happen again, priced in fiat. So this is where I think we're at, and I think the rich are actually waiting. They're waiting this out, and they're waiting for the lowest price. That's what I think they're waiting for. And I think that allocation is a problem, but I think it's a problem that they're going to solve at one specific point in time. So for you guys out there, you know, I think 2022 might be the year. Might be the year for precious metals, like never seen before. And we've seen these big gains in cryptocurrency. But now it's precious metals. It could be their turn for the big gains. And, you know, I know an awful lot of you are really depressed, and you're going to even be more depressed because as this bubble bursts, maybe in around the end of this year, or might have a Christmas rally in the stock market, but toward the end of this year, when we move into next year, when the soberness hits the markets of what's really happening with the Fed tightening and continuing to tighten into early next year, we could see a crash, and we could see a crash in the silver and gold prices, and that's might be what the rich are waiting for. Okay? And it could be very depressing for you guys because of stored gold and silver moving into early part of next year, January, February, March, along in there. Could be extremely depressing. I mean, you want me to say how low I think prices could go on gold and silver? It might just be down. It might go all the way down to mining production costs, or not much above mining production costs. But you know, that's going to only make things. It's only going to make. It's only going to make the situation worse for allocating physical supply, because the miners out there, when it gets down near mining production costs, they're like, let's shut down that end of the mine over there. Turn the machines off, boys. There ain't no money in it for us right now. We're going to shut down the A section of the mine. Okay, boss. This is going to happen. Do you think that's... And now there's about a 6-month delay on that. When they shut down a section of the mine, there's about a 6-month delay before you actually see that in the markets. 6 to 8 months later. So, I mean, that's what happens if they get the gold and silver price down too low where the miners aren't making any money. Miners are like everybody else. They got to take bread home to their family. Let's get in there and take a look at the markets today. Let's open up the charts right here. We're going to take a look at... now, here's some good news, guys. Samsung plans to build a $17 billion chip plant in Texas. That's wonderful news. We need more companies to make the products the best in the world. American workers make the best products in the world. That's a simple fact. Samsung plans to build a $17 billion chip plant in Texas. Hooray for Texas. We need more factories. Uh, we need more industry. Instead of it moving out to other countries, we need more. Okay, but this is really good news. So let's take a look at the silver price today. 23.48. It's down 15 cents on the day so far. That's the silver price today. So, you know, I mean, this is kind of depressing because we were getting up near $30. Now it's back down to $23. And I'm telling you guys, the Fed pricking the bubble, you know, what they could do is they could create a shortage in the metals, and rich people could decide to come in and put in allocated positions to try to preserve their wealth against this next big financial crisis. And then zip diddy doo da, the lowest prices it goes down to the lowest prices you've ever seen, and then all of a sudden there's none available, and then the price shoots up. And what's anybody going to do about it? Because then there will be a mad frantic panic to buy. Not just in the smaller investors, but big investors, really big investors, and wanting to allocate. And what are they going to do about it? Are they going to say, hey, you know what? You just can't have any. They might. That's just going to make things worse. They say, oh, you can't have any. Sorry, you can't have any. We have to preserve it for industry. Otherwise, industry's all going to stop. Whatever's left. Silver shortage, yeah, we're gonna ration it off, and nobody's allowed to buy it. You're only allowed to sell it at that point. You know, they might do something like that. Who knows? Let's take a look at gold today. I can tell you one thing. If something like that were to happen, I'm going to tell you the price is going to go awful high on this stuff. $17.81 for gold today. $8.20 down on the day so far. Now let's take a look at Kryptos. I'm going to refresh the page. It's at 25.46 right here. 25.39, so it's still going down. We're looking at Bitcoin at $56,077 today. I think that cryptocurrencies could take quite a hit when the markets pop, when the markets burst, you know, when we get a crash in the markets. But between now and then, we could see cryptocurrencies pop up in price a little bit between now and then, you know. This is a low ebb right now. We've all seen this before. I think the last time it was down in the 40s for Bitcoin on a low ebb like this. Nothing goes up in a straight line, you know. And we could see the markets go through another period of exuberance between now and Christmas, like a Christmas rally, and we could see the cryptos do the same thing. But look out for next year, because the Fed is pricking this bubble, and this bubble's going to start to burst next year. That's what we're watching for on this channel. Okay, Dow Jones Industrial Average is down 198 points on the day, 35,615. It looks like a sudden drop. Now let's take a look at crude oil. Is at 78.18. It's down 32 cents on the day so far. We're going to check out the MOVE index. It's at 80.57. Now it's getting a little bit over 80. I've been telling you guys about this. 80 is the mark I watch for to say, hey, this is a problem. We could have instability in the credit markets. We're over 80 right now. For the first time in a while. Will it stay over 80 or will it go higher? We're going to have to wait and see. This is one of the indicators that the Fed watches very carefully. Let's take a look now at bonds and rates. We're seeing bond yields creeping up. We're seeing, on the 10-year, we're seeing almost 2 basis points at 1.68. That 10-year's creeping up toward 2. If it goes over 2, watch out. Okay, U.S. 30 years at 2.02. Yeah, the Fed tapering. That's a great idea. Now, I'm being very sarcastic. But, you know, I think if they had held the line, not bothered with tapering, actually put out a little bit more money creation, more stimmy checks, you know, and stuff like that. They could hold this hyperinflation off for quite a long time. Just basically, the people will continue to use the currency. Just basically keep adding zeros, you know. And even when the hyperinflation's here, just keep adding more zeros. and basically change it would basically change the unit value of the currency. So basically, the things you used to buy with $1 now they'd be $100. Because they've added a couple zeros. Just keep adding more zeros, and they could extend this thing out for the next 10 years, and extend the crisis out by adding zeros, increasing everything, is basically increasing the monetary. Of course, this would kill savers. It kills people on fixed income, you know. But they don't mind doing that. And the alternative to that is ultimately is a default that would just crush everything. Basically, it'd bring the economy to a stop. You can't default on the U.S. debt. I mean, you've had Janet Yellen up there telling you what would happen. It'd be an unparalleled crisis in human history, basically. Okay, maybe I'm exaggerating what she said just a little bit, but basically that's what it amounts to. Everything runs on money, and if you default and make all the money instantly worthless, I mean, what are we going to work with? Nobody will go to work. I mean, the whole thing will just basically grind to a stop. That's a no-go. That's a no-brainer. That ain't going to happen because the governments would lose power. They have to maintain a power and authority and control. That means they have to keep this monetary system running in one form or another. Well, we're heading toward a hyperinflation or that default. They can't go to the default. That just can't happen. So that means we're heading toward the hyperinflation. But they could go there slow or they can go there fast. What they're doing right now by pricking all these bubbles is basically it's just going to turn into a mess. It's going to speed the hyperinflation up faster on the other side of it. It's creating a little bit of a roller coaster for all of us out there, though. There are alternatives to the dollar, because you could see your alternatives to the dollar go down in value just before they go way up in value. So I mean, I would say the best thing for all of you is just to hang on tight and going to have to suffer through this period that the Fed's creating. The Fed is this behemoth in the financial system. There's like the old joke, there used to be an old joke. Where does a 1,000-pound gorilla sleep? And the answer is anywhere he wants. you know? And this is the way with the Fed. The Fed's this behemoth. It's like a giant octopus with tentacles everywhere. What does it do? It does whatever it wants. And if it wants to prick these bubbles and then unprick them again and resupport the market after, well, that's what it's going to do. And that's what it's in the process of doing. It's not going to do the after part until the before part plays itself out. So this process of them tightening is going to prick the bubbles. But they're not going to worry about that. They're just going to continue to tighten and tighten until the bubbles prick. And then they're going to have to come along after, and they're going to have to try to re-blow up all these bubbles again. What are they going to blow them up with? Money. Well, what we call money. It's not really money. It's just currency units. It's a weird period we're living in right now, guys. And there's an awful lot of stress out there. It's causing a lot of stress with the people. People are under tremendous stress, What you need to do is you need to be very polite and courteous to all the people around you, because you do not know how much stress they might be under. Quite seriously. What we're looking at here is the United States dollar index at 96.84, and it's climbing. And this is a no-brainer. This will probably continue to climb as long as they continue to tighten. Maniacs at the wheel. Okay. Thank you guys for listening to my show. Like and subscribe, and we'll catch you guys in the very next episode. Bye-bye.